Hello and welcome to our video. Today, we're diving into the world of ETFs, an exciting investment opportunity that is gaining popularity in today's financial landscape. In a time when access to global financial markets is easier than ever, ETFs have become a true game changer. But why are they so popular? Quite simply, ETFs offer investors the chance to benefit from the markets without the complexity and risk of active trading. Think of ETFs as a kind of investing for beginners. They are user-friendly, transparent, and provide a wide range of investment opportunities, spanning from stocks to bonds to commodities. But what exactly does the term ETF entail? No worries. Today we will unravel the mystery of ETFs for you. Stay tuned to find out how ETFs work, why they are garnering so much attention in the financial world, and how you, too, can profit from this exciting investment tool. Part 1. What is an ETF? Clarification, comparison, and basics. Let's start by understanding what this abbreviation actually means. ETF stands for Exchange Traded Fund. This name speaks volumes. An ETF combines the best of both worlds, the characteristics of an investment fund and the tradability of a stock. But how does an ETF differ from traditional investment funds and stocks? Well, with an ETF, you're not investing in an individual company like with stocks. Instead, an ETF pools your money with that of other investors to replicate an index. For instance, the well-known S&P 500. Example, imagine investing in an ETF that replicates the S&P 500 index. The experts behind the ETF don't purchase every single company in the S&P 500. Instead, they buy a representative selection of these companies to mirror the index's performance as closely as possible. What did you heard about ETFs before? Share your thoughts in the comments. We're eager to hear your feedback. Part 2. How do ETFs work and why are they so popular? Now that we understand what ETFs are, let's delve deeper into how they operate and why they're attracting so much attention in the financial market. A key concept in ETFs is index replication. Let's shed more light on this. Envision the underlying index that the ETF replicates, containing 100 companies. Instead of buying all 100, the ETF manager selects a representative sample to reflect the performance of the entire index. But how do these ETF shares come into existence? This is where the primary market and secondary market come into play. New ETF shares are created in the primary market. Investors purchase directly from the fund company, boosting the overall volume of ETF shares. The secondary market is where most of us buy and sell ETF shares. Trading occurs between investors, much like with stocks. When you buy ETF shares, your money doesn't directly flow into the ETF itself, but goes to the seller of the shares. Now, you might wonder, are there different types of ETFs? Yes, there are. The two main types are open and closed ETFs. Open ETFs are tradable at any time, whereas closed ETFs have fixed trading periods and behave more like investment funds. One major draw of ETFs is their low costs and fees compared to actively managed funds. Since ETFs replicate the index, the high management costs are eliminated. This can have significant impacts on your returns over time. But there are more reasons why ETFs are so popular. The broad diversification they offer enables you to spread your risk across many companies. You're not investing everything in a single stock, but in an entire group. And you know what? ETFs aren't just for large investors. They're highly accessible for individual investors as well. Many brokers offer user-friendly apps that allow you to buy ETF shares with just a few clicks. Part 3. Types of ETFs. Diversity of investment opportunities. Equity. ETFs track stock indices like the S&P 500, invest in the broad stock market. Bond ETFs Invest in various bonds, from government bonds to corporate bonds, sector and industry ETFs. Focus on specific economic sectors like technology, healthcare, or energy. Commodity and precious metal ETFs. Invest in physical commodities like gold, silver, oil, or agricultural commodities. Part 4. Advantages and risks of ETFs. Let's start with the advantages. ETFs offer plenty. Firstly, liquidity. Since ETFs are traded on exchanges, you can enter and exit the market at any time. No long waiting periods, as can be the case with some investment funds. Then, we have flexibility. You can buy as many or as few ETF shares as you want. There are no minimum requirements, and you have the freedom to tailor your investment strategy to your individual needs. And let's talk about transparency. ETFs publish their entire list of holdings daily. This means you always know which companies or bonds you're investing in. This transparency gives you more control over your investments. Of course, there are also risks that you should be aware of. One of them is tracking differences. Although ETFs strive to replicate their underlying index, there can be deviations. This might be due to fees, dividend payouts, or other factors. Another risk is liquidity issues. While popular ETFs are usually liquid, less traded ETFs can potentially be less liquid. This means that trading with them can be more challenging, especially in volatile markets. Remember that all investments come with risks. ETFs are no exception. It's important to thoroughly research and consider your individual risk tolerance before you invest. Part 5. Dividends and distributions in ETFs. A crucial component of ETF investments is dividends and distributions. These payouts can have a significant impact on your returns and are therefore of great importance. Understanding how dividends and distributions are generated in ETFs and how they're treated from a tax perspective is vital. Dividends and distributions. Basics. Dividends are payments made by companies to their shareholders. They represent a portion of the company's profits distributed to shareholders. Dividends can be regular or irregular and contribute to the overall return on an investment. However, distributions in ETFs can come not only from dividends, but also from interest and capital gains. An ETF portfolio can contain various types of securities, including stocks, bonds, and other financial instruments. Each of these asset classes can contribute to distributions. Part 6. Tips for choosing ETFs. Selecting the right ETF for your investment goals and risk tolerance is crucial. Here are some tips that can help you with your selection. Objective. Clearly define your investment goals and risk tolerance. This will help you choose the right type of ETF that aligns with your needs. Index selection. Investigate the underlying index of the ETF. Check which companies or securities it covers and whether it aligns with your preferences. Cost structure. Pay attention to the expense ratio, TER, of the ETF. Lower costs can have positive long-term effects on your returns. Liquidity. Choose ETFs that are sufficiently liquid to ensure you can easily buy and sell them as desired. Historical performance. While past performance is no guarantee of future results, it can provide insights into the consistency and potential of the ETF. Diversification. Consider how well the ETF offers the desired diversification, whether across different markets, industries, or asset classes. Tax considerations. Think about how the tax aspects of the ETF could impact your individual situation. Part 7. Conclusion and wrap-up. Congratulations. You've learned a lot about ETFs today. Before we say goodbye, let's recap the key takeaways. ETFs, or exchange-traded funds, are a modern way of investing that allows you to access a wide range of markets and assets. From equity ETFs to commodity ETFs, they offer a variety of options to achieve your investment goals. The flexibility and diversity of ETFs are truly remarkable. You can invest in different markets, industries, and asset classes without needing to be a financial expert. ETFs make investing more accessible and less complex for many. We encourage you to continue deepening your knowledge about ETFs. The world of finance is ever-changing, and the better informed you are, the better decisions you can make. Utilize resources like books, online courses, and financial experts to expand your understanding. Thank you for taking the time to learn more about ETFs. Remember that every investment should be thoughtfully considered, and you should keep your personal financial goal in mind. If you enjoyed the video, I'd appreciate a like and a comment. Don't forget to subscribe to the channel and hit the notification bell to stay updated on future videos. Thank you for your support. Until next time on Smart Money Moves.